In the metals quadrant today, taking a look at the August gold contract, which started the month off, continuing its 5-session losing streak. Gold lower 5 consecutive sessions now. It's also continuing its monthly streak lower. Obviously, there's a ton of time left in the month of July, but the second quarter was just an amalgamation of 3 consecutive months lower. Gold was down 7.51% last quarter. It's now down about 1.1% on the year. Today, it only finished mildly lower, but we were down 1.32% on the lows at 1783.40, breaking that 1800 level. Prior settlement, which was yesterday, 1807.3, and then the high today, 1808.70. That was less than 0.1% higher, so it was a down day all the way, but it did come off the lows substantially. Now, recession fears are continuing to plague the metals as the industrial demand continues to dry up. Now, you would think that would be good for precious metals, but overall, we're seeing yields drop. That should also be good for precious metals, but it's not playing out that way just in general. Gold continues to suffer as seasonal weakness plays into it. The economic slowdown talk accelerated today with the weak PMI data that we got in the U.S., and that is actually getting this idea that the Fed may not be as aggressive on rates, and that's the part of it that's hitting gold. I mentioned yields. U.S. yields are falling dramatically, which is part of why gold came off of the lows to near unchanged and toward the end of the day. We actually had the 2-year down 23 basis points this week, the 5-year down 29, the 10-year down 24, and the 30-year down 15. Just from yesterday to today, the 2-year was down 10 basis points on a yield basis, down 9 on the 5-year, down 9 on the 10-year, and down 3 on the 30-year. Steepening the yield curve a little bit, which is also good for the general economy, but overall the economy is looking weak.